What's going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to be checking out this company called Clear Secure, which is ticker YOU. And just a couple days ago, my friend Ryan brought this up to me, and I bought 35 shares at about $22 a share. And now, less than a week later, I am already up over 12%. So I'm happy with the way this one is going so far. And keep in mind, I did not make this into a big investment or big position size for a reason. And that's because there definitely is some volatility and some risk with this company. Over the last year, the stock has been anywhere from $16 all the way up to 38. And so luckily it's come down a little bit here and the valuation is quite attractive. But it's not just about the valuation, it's also about the numbers they're doing. So keep in mind, this is only a $2.4 billion company. It's not very big. And the revenue chart the last 5 years has been growing at an average clip of 32% per year. For last year, they did 770 million in revenue, and the net income, they did 169 million. So the profit margins are outstanding right now. And keep in mind, this company just turned profitable 2 years ago. So then we look at EPS, free cash flow. Both of those charts are looking good. And the cash to debt ratio is good. We got 600 million in cash and only a little over 100 million in debt. And then let's see, we got, as for the shares outstanding, I'm not super thrilled about that chart just because it is slowly trending upward and that's not going to help the stock out. But what I will say is that typically you see that more so when the company is not making money because they need to get money from somewhere. But now that they're profitable, that is a very good sign, and hopefully management will slow down with the number of shares they're issuing. But if we scroll down here to, the, let's see, the return on capital and also the profit margins are both sitting at 22%. So I'm happy with both of those numbers, like I said. And I mean, for the price you're paying what, 16 times earnings or something, 17 times earnings. And this company is they've been growing at 32% per year revenue wise. I think that's makes for a very attractive investment. Then analysts do have their numbers going down this year from 1.8 to 1.3. Then it's expected to jump back up to 1.58. So this year could be a down year for them, but still, I think the numbers are interesting. 14% revenue growth expected this year into then 10% next year. So again, it is quite bit of a slowdown there, but still, as long as I'm looking for long-term consistency and sustainability in the numbers, and I think they have the potential to do that. So then we look at the price to sales history. And once again, as you can see, not that this is the cheapest it's ever been, but it's definitely on the cheaper side of things. Price to sales of 3.2. So I'm very happy to be buying at that price. And let's hope that this one is one of those stocks that can at least double my money. So I guess the other thing I want to point out here is let's see what Yahoo puts their PE at. So they don't have forward P yet, but they do have trailing P is 15 right now. And look at the last couple of years. You can see the P is normally traded much higher than that. So, and if you also want a description of what this company does, we can come down here and you can see they operate a secure identity platform under the Clear brand name, primarily in the US. Its secure identity platform is a multi-layered infrastructure consisting of front end, including enrollment, verification, and linking, as well as backend. So it sounds kind of complicated, but if you look through their website, you can get a better idea of what they do. And for me, it's mostly about the numbers, and the numbers look good to me. So that's why I am happy to be a buyer of this stock.